Good evening. Am I audible? Just let me know if I'm audible. For me, just know that. Please do let me know if I'm audible and visible, and if not, then hello, hello, hello. Good evening. Hello, healer. Hello. So, as you, my video is not clear. Hello, Shrestha. Hello, 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 Trisha. You cannot hear me. The volume is very high. The volume is very high, Hinal. Just check once more. हेलो श्यामल फिर से आपसे मिल लिए ट्वाइस इन अ डे once was not enough so we are meeting here twice Inal I think now it's fine please let me know okay hello Jay is it fine just let me know the voice video I think there is some issue with my light I don't know can you see the screen whatever is written is that visible is the same app I'm using that I was using earlier also fine now yeah the mic was kept a little far okay so we already know what I'm going to do today is what I'm going to do today is I'm going to discuss the Swift scanners with you. Okay. Yes, absolutely, Jay. Matlab full, obviously not all the chapters. Today is only Contract Act. Tomorrow I'm planning to do Sale of Goods Act. Similarly, day after tomorrow, Companies Act. I'm going to do like that. I'm going to discuss each and every question of Swift Scanner here. The practical questions we will emphasize on the keywords, how to understand what the answer is. You already know writing practice. You already know. We'll discuss what provision it is and what the answer should be direct questions I'm not going to go too much into details but yes we will still discuss those questions hello Ramke I'm good what about you one more class about what Shrestha one more class for what hello Deepa thank you for updating one more class for what I did not understand too much of fine huh? Ramke the other day Nikita was missing you a lot Ramke. So we are going to do Swift scanners. As you know, Swift scanners are all the questions that have been asked by the institute in its question papers of the previous years, mock test papers, whatever has been conducted so far just before the exams, both the mock test papers and also. Oh no! I had a revision class for the for some of the students today morning. That and also all the questions that had been given by the institute in its RTP. So all those questions. So it's so the Swift scanner. This document is a set of all of those questions. Now, for those who want these Swift scanners, you can go to the channel. The link for the same is given below. You can go to this channel, and in this channel you will find the Swift scanners of all the acts, right? So if you want this, you can go and the link for the same has been provided in the description box below, right? And moving on to, I want, you guys know how it works with me. I prefer a lot of answers from you all. So I'm expecting a lot of answers from you all. So keep replying to everything, okay? So the direct questions, I'm not going into too much of the direct questions at all, but still, we will also discuss the direct questions state the difference between So this tells us when these questions have been asked. Okay, this tells us when these questions have been asked. So what is the difference between partnership and Hindu undivided family? Well, partnership arises by an agreement. Hindu undivided family arises by status. You are born in the family or a part of the family. But partnership happens only with agreement. A minor cannot be a partner of a partnership firm, but a minor can be a member of the HUF. The moment you're born in the family, you're a part of the HUF. Partnership, which is the most easiest difference, is governed by Partnership Act, whereas HUF is governed by the Hindu law. Partnership has a maximum of 50 partners, but HUF does not have any such maximum requirement. Books of accounts can be checked by all the partners, but in case of HUF, only the Karta can check the book of accounts. Business is carried by all of them, whereas business is carried by Karta. Death of a partner results in the dissolution of the firm, but death of Karta does not result in the dissolution of the HUF. The next eldest member becomes the Karta of the family. Correct? I'm not going too much into it. You already know the differences. It's a direct question, just a recap of it. The next one, what is the difference between partnership and joint stock company? Right? What is the difference between partnership and joint stock company? So, what's the difference between partnership and joint stock companies? Well, partnership is governed by Partnership Act, and joint stock company is obviously governed by the Companies Act. The most easiest. A partnership firm has no separate legal entity, but a company has a separate legal entity. Death of a partner does not result in the results in the dissolution of the firm, but death of a member does not result in the dissolution of the company. Partners have unlimited liability. The liability of member is limited. Then property of the firm belongs to the partners, but property of the company does not belong to the members of the company, right? Partnership is managed by the partners themselves, whereas company is managed by a separate body called the board of directors. Minimum and maximum is 2 and 50 for partnership, whereas for company, minimum is 2 for private, maximum is 200, minimum is 7 for public, maximum is unlimited, and for is only 1. Right? So these are the differences. As I told you, because it's direct question, not going into much of those details here. I have quoted out a few of the differences. And in case of partnership firm, it can be dissolved at any given by a point of time. You don't even need to go to the court. But for company, tribunal's order is mandate. Define partnership and name the essential elements for the existence of partnership. Explain any two such elements in detail. Partnership is an agreement between two or more persons to share the profits of the business carried by all or anyone or more acting for all. Right? Hello, Upendra. Partnership is an agreement between two or more persons to share the profits of the business carried by all or anyone or more acting for all. So, what are the essentials of partnership agreement? Right? Yes, it was one of the questions asked in the December 21 exam and twice in mock test paper. In fact, this mock test only it was asked. So the essentials are what? The essentials are first agreement, then then sharing of profits, right? Then sharing of profits, business, and last one, business carried by all or any one or more acting for all. So, what is agreement? Partnership can never arise out of status. There should be an agreement. The agreement may be expressed or implied. Yes, it can be implied also. If it is expressed, it's oral or written. If it is written, the deed where we mention all the clauses of partnership is known as the partnership, right? Then, what is the agreement about to share profits? Ma'am, profits only, yes, because we may have partners who do not share the losses. Sharing of profits does not necessarily mean sharing of losses. If agreed ratio is there, we share the profits as per the agreed ratio. If nothing is given, we share it equally. Losses are shared as per the agreed ratio, and if nothing is agreed, losses are shared in the profit sharing ratio, right? Then next, where do I get the profits from? I get it from business. Who carries the business? What is business? It's any trade, profession, or occupation which is an economic activity and is recurring in nature, right? Has to be recurring in nature. So a single solitary transaction is not business. Motive is economic activity and it is recurring in nature. One thing, agreement, I just forgot to say, minimum is 2, maximum is, as per the Companies Act, 100, and as per the rules it's 50. So it should not be more than 50, and in fact if it is more than 50 it's illegal association. Then, who carries on the business? The business shall be carried on by all the partners together, or any one or more acting for all. Now, what does this word acting for all imply? Acting for all means when I am doing the work, it's not just me who is liable, but the whole firm is liable by my act. So, I am just acting as a representative for my other partners. And because I'm acting as a representative for the other partners, I am their agent. But when it is concerned to a third party, to the third party, I am the principal of the firm, right? Right? I am the principal of the firm. Param, as per Companies Act, Section 464 of the Companies Act restricts the number to 100, whereas Companies Rules, miscellaneous rules, restricts it to 50. So as per, so when we do a combined study of both the sections and the rule, it is 50. It should not be beyond 50. Okay? So any two had to be explained in details. We have literally done all of it in details. Moving on to the, in fact, you will see in the answer also I've written it all of them in details. You can actually take out any of the two of them in detail. So moving on to the next one. Partner indeed virtually embraces the character of both the principal and an agent. Not going into this, I just explained this is nothing but business carried by all or any one or more acting for all. Right? That is the whole point that you need to explain here. A sharing of profits is not the conclusive evidence in the creation of partnership. Sharing of profits is the prima facie evidence of partnership. The true test is mutual agency. Two or more people, when they share the profits, I can, at the first look, prima facie, at the first look, when I look at the relation of two or more people and see that they are sharing profits, first look, I can say, okay, they are partners. But that is not conclusive, right? That is not conclusive. Good evening, Dashwan. For it to be conclusive, we need to have mutual agency. Mutual agency is one element of business which you don't find in any other form of business. Mutual agency is one element or one characteristics of partnership you don't find in any other form of business. So when two or more people share profits of the business, they can do it in the capacity of a partner, but it can also be done in any other capacity also, like sales manager getting profits as a part of percentage, as a commission is based on profit. So you are getting the profits, but you're not actually the partner of the firm. But if I am doing any business and my act binds not just me but the other partners also, the fact that my act binds other partners also means it is partnership. The other people also means it is partnership. So, sharing of profits is the prima facie evidence of partnership, whereas true test is the conclusive evidence is what? So, sharing of profit is just a prima facie evidence, it is not the conclusive evidence. For it to be conclusive, there should be mutual agency. Then what is the again the same thing? What is the conclusive evidence? You will see that it's written in the same way, maybe a little changed here and there, but at the end it's one and the same thing. Yeah, mutual agency is the cardinal principle. Business carried by all or anyone or more acting for all. I've already explained the twofold character agent principle. That is what we are talking about here. Not wasting your time and my time by going back into that question all over again. State whether the following are partnerships or not. So why don't you also go forward with the answers and just try to give me the answers, okay? A and B jointly own a car which they used personally on Sundays and holidays and let it on hire. They jointly own a car and let it on hire as taxi on other days and equally divide the earnings. Now, just because people will see jointly own, they will think, joint owners. Joint owners are not partners. So, no, not partners. Please, every partner is a joint owner of the partnership property. Just because they are joint owners doesn't mean they cannot be partners. Every partner is a joint owner of the partnership property. Here, see, they are giving it on hire, so there is business, right? and they equally divide the earnings. So sharing of profits is also there. They give it on higher also, and whenever, and this also goes to prove that they have mutual agency, because they are using it personally as well as giving it on higher. So whoever is doing the business will bind the other person also, because they are going to equally divide everything. So this is what this is partnership. Yes. Two firms, each having 12 partners, combined by an agreement into one firm. Yeah, two firms can join. Yes, absolutely, they can join. Now, I just have one question for all of you here. Think and tell me whether there will be two partners or 24 partners. Okay, two partners or 24 partners, that you have to answer me. So, absolutely okay. Two firms can form a single partnership. It's not the firms who are forming, it's the partners who are forming. A and B co-owners agree to conduct the business for common profit. So they are co-owners. That does not mean that they are not eligible to be partners. They are going to conduct business for common profit. So business is there, profit sharing is there, and obviously it's implied. It's not said that A alone will be liable. If they would have said that A alone would be liable, then we would have said okay, it's not partnership. But nothing is given, so obviously it's implied that all of them are liable. Correct or not? So this is definitely partnership. You all, I want everyone to give the answer on the number of partners, and at the end of this question I'll discuss how many partners are there. Some individuals form an association to which each individual contributes to 500 annually. The objective of the association is to produce clothes and distribute the clothes free to the war widows. Well, actually they are doing business of manufacturing clothes, but the thing is that they are going to distribute it free, right? They are going to distribute it free to the war widows. Since they are going to distribute it free, there is no motive of profit. And we can have a company which is a non-profit company, but we can never have partnership which is non-profit. Partnership motive is always and always to earn profit. So since there is no profit motive, it is not a partnership. Correct? A and B co-owners share between themselves the rent derived. They are just co-owners. There is no business activity. There is nothing. There is no economic activity, no business activity. It's just a single transaction. So no, they are not. They are not. What do you say? They are not. Yes. A and B buy commodity X and agree to sell the commodity with sharing the profits. Again, the same thing. Yes, they are partners. So basically, three are partners, two are not partners. And okay. So coming to the answer, it is 24 partners. The reason being, let's say X and company, Y and company are two partnership firms with 12 partners each. Now, when they join together to form a separate partnership, it's not the firm who are joining, because a firm has no separate legal entity. So it's not the firm who is joining, but it is the partners who are joining, right? If it was two company, then it would have been two partners, but partnership firm has no separate existence. Now when the partnership firm has no separate existence, they are not joining, but the partners are joining. So it is how many? 24, right? So I hope those who gave the wrong answer have understood why your answer is wrong. Those who have given the right answer, they can actually tap their back that okay, you are using your brains, you're not scared of the exams. Those who have got the wrong answer, half of them are super scared for the exams, and maybe that's the reason they're giving the wrong answers. Otherwise, my students would never give the wrong answer. Shamal, Tisha was a little smarter. Now, what do you mean by partnership for a fixed period? It is a partnership which is formed for a fixed period of time. Once the period is over, but the firm is dissolved. But if the partners want, they can continue. And if they continue, it becomes a partnership at will. So, partnership, particular partnership, which is formed for a particular purpose. Once the purpose is over, the firm is dissolved. But if the partners want, they may continue. And if they continue, it becomes a partnership at will. What is partnership at will? Will, Mary, I will. No time is given in this partnership to determine how long the partnership will continue. So, ma'am, how long will the partnership continue? As long as we want, right? as long as we want. One of the most unique features of partnership at will is that any partner can give a written notice and either dissolve the firm or retire from the firm. Otherwise, we need the consent here. We can just give the written notice and retire or dissolve from the firm. Correct? X and Y are partners in a firm. X introduced A as a manager as his partner to Z. So basically, he is a manager. He is not a partner, but X introduced him as a partner. So when you are not a partner but you are introduced as a partner, this is what partner by estoppel or holding out. A remains silent. Wow. Z a trader believing A. Now tell me, can we say if anyone believing that A is a partner makes a contract, can we say A will be liable to that person? Yes. Z, a trader believing A as partner, supplied 100 TV sets to the firm on credit. After expiry of credit period, Z did not get the amount of TV sets sold to the partnership firm. Z filed a suit against X and A for the recovery of the price. Advise Z. Yes, can he sue? Yes, because he's a partner by estoppel or holding out. When a person becomes a partner by estoppel or holding out, his liability shall be severe. If he does not deny, he becomes a partner by estoppel or holding out. Right? Yes, he shall have severe liability. Right? He shall have severe liability. I hope it's clear to everyone. If you still have any doubts in any of the question, you can actually ask me. I'll explain it in details in that case. Who is a nominal partner? Who lends his name to the firm? What is in the name? Everything is in there, right? Lends his name to the firm because of the goodwill attached with it. Does he bring in capital? Dude, I've got in my name. मतलब सब कुछ मुझसे ही ले लो, है ना? कैपिटल भी ले लो, नाम भी ले लो, सभी कुछ मैं ही दे देती हूँ. मैं बिजनेस भी कर लूँ, right? I will only do everything. Then why the hell are you there? So, he gives his name to the firm. He does not bring in capital. He does not take part in the business. He generally doesn't even take profits or losses. He gets a fixed royalty. But he's known to the outsiders because it's his name. Liable to the outsiders because I'm going to the firm because of his name. I have to give a notice of retirement. Why? Because if I'm going to the firm because of his name, if he's no longer a partner, I should at least be told about it. Correct? Mohan, Sohan, and Rohan are partners in the firm. So this was a RTP November 22 question. Mohan, Rohan, Sohan are partners in a firm, Messrs. Mosoro and Company. Seriously. They admitted Bohan Mosorobo, wow, as a nominal partner. He lends his name to the firm on an agreement between all the partners. Bohan is not entitled to share profits in the firm. After some time, a creditor, Karan, filed a suit to on Bohan for recovery of his debt. Bohan denied for the same as he is just a nominal partner and is not liable for the debts of the firm. Well, happy realization, Bohan, whatever his name is. What is his name? Bohan? Why the hell you don't know laws? You should first check your laws before you come and become partner. So he says he is not liable for the debts of the firm because he is just a nominal partner. And bhai, you are nominal, you are to even more liable, bhai. And Karan should claim his dues from the other partners. Taking it whether Bohan is liable. So is Bohan liable for the dues? Can I say yes? Exactly. Hmm. In case Karan has filed the suit against the firm, whether Bohan would be liable? Yes, absolutely, he will be liable. Yes, exactly. Whether a minor, so can I move to the next one? Yes. Whether a minor may be admitted in the business of partnership firm. Explain the rights of a minor. Can a minor be admitted? Well, yes, a minor cannot make a contract. So since he cannot make a contract, he cannot be a partner. Also, partner means unlimited liability and a minor can never have unlimited liability. So a minor cannot be a partner of the firm, but he can be admitted to the benefits of the firm. So what are the rights of the minor when he becomes a beneficiary? So he will get his share of profits. I'm a beneficiary, I should get my share of profits. He can check, inspect, and copy the accounts of the firm. He can also sue the other partners for his share, provided he severs all his connections with the firm. When he attains majority, within 6 months from the day he attains majority or the day he comes to know he was a beneficiary, whatever is later, he must give a notice to the other partners and a public notice of whether he wants to become a partner or not. If he fails to give notice, he will automatically become the partner of the firm. Yes, if he files a case, he has to sue all his connections. Sever, sorry. State the legal position of a minor before and after attaining majority. When he opts to become a partner of the firm. When a minor opts to become a partner of the firm, he shall now become a partner of the firm. His rights will remain the same and he will be liable from the day he was admitted to the benefits of the firm. When he decides not to become a partner of the firm, if he decides not to become the partner of the firm, he will just take back whatever his share is and he will have no further connections with the firm. Correct? So basically, this is the same thing that we had talked about. He will get his share. If he doesn't get his share, he has a right to sue the other partners also. So a minor, yes, please don't forget, Bachpan se live. This is very important when it comes to minor. Institute's favorite, minor ka topic is institute's favorite. So, oh, is it Nikita? And Institute's favorite question also it is. So, though a minor cannot be a partner in a firm, he can nonetheless be admitted to the benefits of partnership. Referring to the provisions of the Indian Contract Act, state the rights which can be enjoyed by a minor partner. I just told about the rights. I'm not going into that again. Okay. State the liability, those four rights I talked. Liability before attaining majority. Before attaining majority, a minor is never personally liable. The liability is against his share in partnership. That means he does not have to bring in anything from home, but his liability shall be only that if tomorrow there is a loss, he'll not get his share. That's it. After attaining majority, if he decides to become a partner, if he leaves the firm, obviously no liability. If he decides to become a partner of the firm, he is liable from the day he was admitted. याद रखना बचपन का प्यार. Okay? हाँ, बचपन का धोखा हो जाएगा better. Okay? हाँ. Yeah, it's interesting. So यहाँ बचपन का धोखा, बचपन से जो धोखा मिला हुआ है ना, तो वो that you have to be liable for that. I hope it's clear to everyone. Master X was introduced to the benefits of partnership. ठीक है? Ram, no one can relate to it more than you, obviously. Master X was introduced to the benefits. After electing to be a partner, his liability is unlimited. So not just his share, he is personally liable. Okay, he is personally liable, not up to his, not just his share. He is personally liable. Master X was introduced to the benefits of partnership of Messrs. ABC and Company with the consent of all the partners. After attaining majority, more than 6 months have lapsed and he failed to give public notice as to whether he elected to become a partner. More than 6 months have lapsed and he failed to give public notice as to whether he elected to become a partner or not. What will happen then? He shall automatically become what? The partner. He shall automatically become the partner of the firm. Correct or not? Exactly. He will automatically become the partner. Later on, L, a supplier of material to Messrs. ABC and Company, filed a suit against Messrs. ABC and Company for recovery of the debts due. In the light of the Indian Contract Act, to what extent X will be liable if he failed? Can we say he will be liable personally? Yes. And can Mr. L recover the debt from X? Yes, he can, just like any other partner. Sorry, I'm so sorry. Just like any other partner. Yes. Am I correct? Everyone should be answering. You're not there to sit cozy, cozy in your blankets, not doing anything. Just, looking at the video with all your hands and everything inside, just AirPods in plugged in. No. Moni and Tony were partners in the firm Messrs. Moto and Company. Amazingly, thank you, Nikita. Thank you, Nikita. I mean, can you imagine the name? Matlab, they are whoever makes the names. They like Nikita control. Whoever makes these names, no, seriously, some innovation there. They should actually be the people who make names for companies, right? Jha would be happy to see that. Moni and Tony were partners in the firm Messrs. Moto and Company. They admitted Sony as a partner in the firm, and he is actively engaged in the day-to-day activities of the firm. There is a tradition in the firm that all the active partners will get a monthly remuneration of 20,000. I want you to listen carefully. There is a tradition in the firm that all the active partners will get a monthly remuneration of 20,000, but there is no express agreement. After admission of Sony in the firm, Moni and Tony were continuing getting salary from the firm, but no salary was given to Sony from the firm. Sony claimed his remuneration but was denied by the existing partner by saying that there was no express agreement. Remuneration is generally not payable to a partner. However, remuneration is payable under two cases. First, if there is an agreement, or second, if it is the custom or tradition of the firm. Here, there is no agreement. There is no agreement, but it was the custom of the firm. And because it was the custom of the firm, every person who joins the firm as an active partner is entitled to get the money. So can Sony claim the remuneration? Yes, absolutely. Sony can claim the remuneration. Correct? What do you mean by goodwill? What do you mean by goodwill? Goodwill means goodwill is a property of the firm subject to a contract between the partners. Goodwill, like any other property, shall be considered to be the property of the firm. And what is goodwill? It is basically the future earning capacity of a firm, right? Ma'am, I will only write two, three lines. Yes, I mean, you cannot just write anything which is irrelevant. Just write what is relevant, and that's enough for your answer. ABC, partners of a partnership firm carrying on the business of construction of apartment. B, who himself was a wholesale dealer of iron bars, was entrusted with the work of selection of iron bars after examining its quality. As a wholesaler, B is well aware of the market condition. The current market price of iron construction bar is 350 per kilogram. B had already purchased 1000 kgs of iron bar in stock, which he had purchased before the price hike for 200 kgs. He supplied the iron bars to the firm without the firm realizing the purchase cost. Without the firm realizing the purchase cost. B is liable to pay the firm the extra is B liable to pay the firm the extra money that he has earned, or he doesn't have to inform the firm as it is his own business and he has not taken any amount more than the current rate. The whole fact is that can you earn any personal profits from the firm? Personal profits from any transaction of the firm or by using the name or assets of the firm is not allowed. So if you are earning any personal profits by using the name or assets of the firm, it's not allowed. So you have to give a share of the profit to the other partners. So he is accountable to the other partners for this profit. And he must give a share of it to the other partner. Right? He must give a share of it to the other partner. Is it clear? Is it clear? Discuss the provisions relating to personal profits earned by a partner. So we just did it. So there are two provisions here basically about personal profits. Now, you can earn personal profits. You can earn personal profits either from the transactions of the firm or by using the name or assets of the firm or from any business which is competing with that of the firm. And in all the three cases, you are accountable for this profit. You are accountable for the profit. Correct? You are accountable for the profit. Whether a group of person is or is not a firm, or whether a person is or is not a partner in a firm, how would you determine the existence of partnership? Can we say again it is the same thing, mutual agency and all that? Acha, the question here, no, there is, acha, all of you, whoever is there in the class today, please listen. Page number 26 question, okay? The answer is given on page 27. And answer of 26, the question is given on page 27. There was one error here. Please, huh? So can we say you are supposed to write here about true test, which you will see here. Please make sure there was some error here. I'm very sorry about that error. I did not realize it. There was this error. So I will upload it with the rectification, but still if you have already downloaded the old one or you're referring to the old one, okay? So it is again obviously talking about the true test of partnership. Yes. Define implied authority. In the absence of any usage or custom of trade to the contrary, the implied authority of a partner does not empower him to do certain acts. State the acts. So, implied authority of a partner means the authority of a partner to act in the name of the firm and to bind the firm by his acts. However, the act binds the firm only when the act is done in the usual course of the business. If the act is not done in the usual course but the other partners ratify it, the whole firm is liable. Now, the following acts are not within the implied authority of a partner. Submit any dispute to an arbitrator, relinquish or compromise the debts of any, or claims of the firm, withdraw any case filed on behalf of the firm, admit any liability in any suit filed against the firm, transfer immovable property on behalf of the firm, open a bank account in his own name on behalf of the firm, enter into a partnership on behalf of the firm. 3, 4 are easy, 2, 3 are a little confusing, nothing else. Remember arbitrator, claims, compromise or relinquish claims, right? Then admit any liability against the firm. So suit, there are two things, three things relating to suit. One is going to the lawyer is allowed, going to the arbitrator is not allowed. If a case is filed, you cannot withdraw it. If a case is filed against the firm, you cannot speak against the firm. This is all the three things relating to case. Then comes money. When someone has to give money, you cannot relinquish or compromise that money. So money comes bank account, you cannot open a bank account in your own name. Money also comes immovable property. Movable is allowed, immovable is not allowed. Right? You cannot enter into a partnership on behalf of the firm. A, B, and C are partners of a partnership firm, ABC and Company. The firm is a dealer in office furniture. A was in charge of purchase and sale, B was in charge of maintenance of accounts of the firm, and C was in charge of handling all legal matters. Everyone should be answering. Just a few of you are answering, and some of you who were answering in the beginning have stopped answering. Everyone should be answering the questions. You know how much of importance I give that everyone should be answering. A was in charge of purchase and sale, B was in charge of maintenance of accounts of the firm, and C was in charge of handling all the legal matters. Recently, through an agreement among them, it was decided that A will be in charge of maintenance of accounts and B will be in charge of purchase and sale. That is, they have changed it. Can we say this is change of authority? Yes, this is what? This is change of authority. When it comes to change of authority, is it binding on third party? Yes, if they know. know about this change, right? Is it binding on the third party? No, if they don't know about the change. If they don't know about this change, right? So it is binding on the third party, yes, if they know about it, no, if they don't know about the change. Being ignorant of such agreements, M, a supplier, supplied some furniture to A, who ultimately sold them to a third party. Referring to the provisions of the Partnership Act 1932, advise whether M can recover the money from the firm. Yes. Any third party, if he is not aware of the change, he can recover the money. He can hold the firm liable for it. Since M was not aware of the change, he can. What will be your advice? What will be your advice in case M was having knowledge about the agreement? If M was having knowledge about the agreement, then he cannot recover because then he is bound by these changes. Correct? Then he is bound by these changes. In the absence of any usage or custom, the implied authority of a partner. Okay, correct. So if you have any doubts in any of the question, you're not able to understand, want me to explain it again, please ask me, I'll explain. In the absence of any usage or custom of trade to the contrary, the implied authority of a partner does not empower him to do. I'm not going into this. We have already discussed all the 7 points, right? Ma'am, it is 8. So it is basically, I talked about immovable property, buy or sell together. Here it is written separately. That's it. Explain in detail the circumstances which leads to liability of a firm for misapplication by a partner. There are two cases here. If if the third party gives cash to the firm and a partner misapplies it, or if the third party gives cash to the partner and the partner misapplies it, in both the cases, who will be liable? The firm is liable. Ma'am, but he can recover it. The other partners can recover it from that partner. That's not my concern. That's not the question. Ma'am, but you told us when you were teaching. I told you because you had doubts in your mind. Ma'am, this is not correct. Just to clarify those doubts, I explained. Right? Just to clarify those doubts, I had explained it. Otherwise, you just don't have to write they can recover it from him. No. The firm is liable. Khatam. Exactly. The firm is liable. Now, the next one. A, B, and C are partners in a firm called ABC firm. A, with the intention of deceiving D, a supplier of office stationery, buys certain stationery on behalf of the firm. The stationery is of use in the ordinary course of the firm's business. A does not give the stationery to the firm, instead brings it to his own use. But here, what if we observe the order was made on behalf of the firm and it was of use in the ordinary course of the business for the firm, right? The supplier D, who is unaware of the private use of stationery by A, claims the price from the firm. The firm refuses. Can they refuse? Since a partner is acting in the ordinary course of the business and on behalf of the firm, can we say the firm is liable? Yes, right? So can the firm refuse to pay? No, they are liable to pay. So whether the firm's contention is tenable? No, the firm is liable to pay this money. The firm's contention is not tenable. The firm is liable to pay this money. What would be your answer if a part of the stationery so purchased by A was delivered to the firm by him and the rest of the stationery was used by him for private use about which neither the firm nor the supplier D was aware. Sustainable means stand. The answer would still be the same, irrespective of how much was used by the firm or anything. The firm is, because the act is done in the ordinary course of the business and on behalf of the firm, it is the firm who is liable. Right? It is the firm. What do you mean? Point out the extent in case of emergency, referring to the provisions of Indian Partnership Act. So basically, what is the implied authority of a partner? It is the authority of a partner to act in the name of the firm and bind the firm by his acts. However, the act must be done in the ordinary course of the business. In an emergency, if a partner acts outside his authority to protect the interest of the firm, excuse me, it is the firm who is still liable, even though the act was done in outside the authority. However, the third party must not know that the act was done outside the authority. If the third party is also aware that the act is done outside the authority, he cannot hold the firm liable because you cannot claim any ignorance, right? Here also the answer, there is something wrong with the answer here. Ah, it's given. Emergency. Mahesh, Suresh, and Dinesh are partners in a trading firm. Mahesh, without the knowledge or consent of Suresh and Dinesh, borrows himself rupees 50,000 from Ramesh, a customer, in the name of the firm. Mahesh then buys some goods for his personal use with the borrowed money. Can Mahesh hold Mr. Suresh and Dinesh liable for the loan? It is a trading firm. Now, for a trading firm, giving of loan is what? Usual course of business. Usual course includes taking of loans. Usual course includes taking of loans, right? So, this taking loan was in the usual course of the business. So, Suresh, is Suresh Is Suresh and Dinesh liable? Yes, they are liable. Correct? They are liable. What is the provision related to the effect of notice to an active partner? A notice to the active partner is a notice to the firm. So, while dealing on behalf of the firm, if the active partner has knowledge about any fact, it shall be deemed that the whole firm knows about it. However, the notice must be actual and not constructive, right? The notice must be actual and not constructive. Whether a minor may be admitted to the and explain the rights. I am not going into this. We have already done this. Yes, yes. A, B, and C are partners in a firm. As per the terms of partnership deed, A is entitled to 20% of partnership profits and property. A retires from the firm and dies after 15 days. B and C continue without settling the accounts. So when the firm is continuing its business without settling the accounts, and since the person is dead, obviously his legal heirs will get the right. So what will be their right to get the share of profits at the rate of 20%, right? Right? For settling, or they will get interest on the shares at the rate of 6%, right? Since nothing is given here, or they will get subsequent profit. Correct? So they will either get share of profits at the rate of 20% or they will get interest at the rate of 6%. Why did I cut that and write subsequent profits? Because that is the word, you will remember it better. What rate will they get subsequent profits? At the rate of 20. Correct? Mr. A transfers his share in a partnership firm to Mr. B. Mr. B is not entitled for few rights and privileges. Discuss in brief the points which B is. Well, B is only entitled to get his share of profits. He cannot interfere in the business of the firm, nor can he check, inspect, and copy the accounts of the firm. On dissolution, he will get his share, and to determine his share, he will be given a statement of affairs as on that day. So, he does not have the right to interfere with the conduct, to require the books, or to inspect the books of. The same question was not there. I think it was different. Yes, or same was there. Oh yeah, it was there. You will remember it more better because you've written the test. Ram and Company, a firm, consists of three partners, A, B, and C, uh, having one third share each of the firm. According to A and B, the activities of C are not in the interest the activities of C are not in the interest of the partnership and thus wants to expel C from the firm. Can they do so? Expulsion can be done if it is in the consent of with the consent of majority, if there is an express agreement, and most importantly, if it is in good faith. For good faith, the person should be served with a notice, given an opportunity of being heard, and the reason for expulsion is that it is against the interest in the interest of partnership that we are expelling the partner. A, B, and C are partners in a firm. The firm has decided to purchase a machine. They had decided to purchase a machine. Purchase a machine. Before A and B make the purchase, C is dead. Right? The machine was purchased and thereafter A and B became insolvent. Can he recover? See, the estate of the deceased partner is liable for the dues arising before his death. Correct? C's estate is liable. Exactly. Yes. Correct, Param. Thank you for the reason also. So, C's estate, the deceased partner's estate, is only liable for the dues that were accruing before his death. Here, the purchase was only made after his death. So, when he was dead, sorry, here, before they could purchase the machines, he was dead. So, the purchase was only made after his death. So the liability arises only when we make the purchase. So when the purchase was made, C was not there. Liability arises, C was not there. So why will he be liable? So no, not liable. I hope it's clear. Chalo, moving on to the next one. Messrs XYZ and Associates, a partnership firm with XYZ as senior partners, where exactly correct. Very 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 true. भाई आप हो ही नहीं तो शामिल थोड़ा सा you know what do you say, being soft with your words. Switch off, huh? Like seriously, switch off. वो switch on off कर दिए जैसे. Messrs XYZ and Associates, a partnership firm with XYZ as senior partners, engaged in the business of carpet manufacturing and exporting. We have done this question so many times in the class also, and exporting to foreign countries. On 25th of August 2016, they inducted Mr. G, that is, took Mr. G as an expert in the field of carpet manufacturing as their partner. On 10 Jan, Mr. G was blamed for unauthorized activities. Matlab his activities are not good, not right, and thus expelled from the partnership by united approval of the rest of the partners. Examine whether the action. Now, see, for expulsion, I need consent of majority, express agreement, and most importantly, good faith. Right? Here, all the other partners agreed for his expulsion. So, this point is there. Thank you so much, Param. Correct. And I'll get back to his answer. Why it is important to write that also. Why he has written the answer like that. So now good faith. Good faith requires three things: interest of partnership, notice, and opportunity of being heard. Now the thing is that he was engaged in unauthorized activities. That means it was against the partnership interest to let him be the partner. Correct? It was against the partner because he was doing unauthorized activities. It was against the interest of partnership. So this point is there. But nothing is given about notice. So I have a justified reason for expelling him. But for expulsion, notice and opportunity of being heard has to be given, and nothing is given here. So rather than writing no, the most appropriate way, or yes, some people may say yes, also some people may say no. So writing a bland, yes or no wouldn't be correct. We can see justification in expulsion. So rather, the proper way of writing is examine whether the action by the partners was justified or not. Yes, provided he was given a notice and an opportunity of being heard. when I write like this, I am very much making it obvious that, see, justified though it is, but provided you gave him a notice and an opportunity of being, right? What would have been the factors to be kept in mind? We already discussed these are the factors to be kept in mind prior to expelling the partner. State the modes by which a partner may transfer his interest in the firm in favor of another. A partner can sell, pledge, or mortgage his share in partnership to another person. So, transfer of shares means when a partner transfers a part or whole of his share to another by way of sale, pledge, or mortgage. Now, for transfer of shares, what is really important is that I need either the consent of all or express agreement. Without the consent of all or express agreement, transfer of shares. Mr. M is one of the partners of Messrs. XY Enterprises. This was also there in the MTP, if I'm not wrong, Nikita. She's the best person. She's always pointing out this was there in the MTP. This MT, sorry. There in the end. So he owes a sum of 6 crores to his friend Mr. Z, which he is unable to pay on due time. So he wants to sell his share in the firm to Mr. Z for settling the amount. In the light of the provisions of the Indian Partnership Act, discuss, can he transfer the share by way of sale? Yes. Transfer of shares. Okay, now my system has started working up. Yeah, I know. That is why I told you. Can he transfer the shares? Yes. By way of sale? Yes, because transfer can take place by way of sale, pledge, or mortgage. Right? So, can he do that? Yes. What would be the rights of the transferee in case M wants to retire from the firm after a period of 6 months from the date of transfer? Rights will be he'll get his share of profits. He cannot check, inspect, or copy the accounts of the firm. He cannot interfere in the business of the firm. If tomorrow the firm goes into dissolution, he'll get his share, and to determine his share, he'll be given a statement of affairs as of that day. Discuss the liability of a partner for the act of the firm and the as per. Oh, we have already discussed this question. I'm not going into this again, right? Oh, no, 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 we have not done this. I'm so sorry. Discuss the liability of a partner for the act of the firm. When a partner acting in the ordinary course of the business and in the on behalf of the firm, as he binds not just himself but the entire firm, right? To some extent, we can also say we are talking about an extent carried by all or anyone or more acting for all. Then again, for the acts of a partner to the third and liability of the firm for the act of the partner. Again, when a partner does any act in the ordinary course of the business and in the name of the firm, it's not just he alone who is liable, but the whole firm is liable to the third party. Okay, we have already done this question also. Just recently we did it some time back, so I'm not going into this question. When the continuing guarantee can be revoked? Well, continuing guarantee is revoked any case when the reconstitution of the firm takes place. Reconstitution of the firm means admission, retirement, death, insolvency, expulsion, and transfer of share. Right? So it is the guarantee is automatically revoked in the case of any reconstitution. Mr. Miss M, N, and P were partners in a firm. The firm ordered JR Limited to supply the furniture. I think this was there in MT. To supply the furniture, P dies and M and N continue the business in the firm's name. The firm did not give any notice about P's death to the public or the persons dealing with the firm. The furniture was delivered. First of all, in case of death, notice need not be given. The furniture was delivered to the firm after P's death. Fact about his death was known to them at the time of delivery. It doesn't make a difference at all. Afterwards, the firm became insolvent and failed to pay the price of the furniture to JR Limited. Explain. Can we say it's kind of a little extended version of the question that we did earlier? Same furniture question was there earlier. Just a little extended version of that same question. Yes or no? And yes, thank you, Nikita. Yes, yes, Hinal. I'll just go back to that. Yes, Nikita. No notice was given, and yes, Param, because the furniture did not arrive till P's death. See, you would say, but it was ordered. But the debt arises in the books of accounts only when the order is accepted. We just placed an order. The order was never accepted. The goods were never delivered. So the liability did not ever arise. So when the liability did not arise, how can the estate be liable? Correct or not? So we don't have to give any notice as it is. We don't have to give any notice as it is. No, someone has given a guarantee on behalf of the firm. Right? So whether P's private estate is liable? Absolutely no, not liable. Why? Because liability of a partner is only for the acts done by the firm before his death, or the dues arising on behalf of the firm before his death. Whether does it make any difference if JR Limited supplied the furniture to the firm believing that all the three partners are alive? No. The answer is still the same, because it doesn't really make a difference at all whether the partner is alive or not. Death automatically ceases to be the partner of the firm. Continuing guarantee, basically this is my firm. Continuing guarantee, I'm talking about continuing guarantee. Let's say this is my firm, right? This is my firm. This is my guarantor. We call him surety, and this is third party. So basically, surety gives an assurance to the third party that if the firm does not pay, I will pay. Okay. Now, if the agreement does not state anything, if the agreement now obviously to create this surety, or this for this surety agreement, there will be an agreement between them. Now, if the agreement does not state anything, if there is any change in the constitution of the firm, if there is any change in the constitution of the firm, what is change in the constitution of the firm? Any partner leaves or joins, right? What is change in the constitution of the firm? Any partner leaves or joins. Then in that case, if the agreement says we will continue, we will continue. But if the agreement is silent, the guarantee is automatically revoked. Is it clear to everyone? Hinal, I hope your doubt was clarified. If you still have any specific doubt, you ask me, I'll explain that in that case. So moving on to the next question. Ram, Mohan, and Gopal were partners in a firm. During the course of partnership, the firm ordered before the machine. I think we have almost covered it. Do I need to? So whether Ram's estate, Ram was already dead. Ram had expired. So is Ram's estate liable? Can we say no? Yes. And against whom can the creditor obtain a decree? That is an order from the court. He cannot get it against Ram, but he can get it against Mohan and Gopal. Correct or not? He can he cannot get it against Ram, but he can get it against Mohan and Gopal. Correct? Yeah. PQR and S are the partners in Messrs PQRS and Company, a partnership firm which deals in trading of washing machines of various brands. Due to the conflict of views between partners, P&Q decided to leave the partnership firm and started a competitive business on 31st July 2019 in the name of Messrs PQ and Company. Meanwhile, R and S have continued using the property in the firm's name, in which P&Q also have a share. Based on the above facts, explain in detail the right of the outgoing partner as per the Indian partnership and comment on the following. What are the rights of an outgoing partner? They will get their share of profits. If the accounts are not settled, they will get subsequent share of profits or interest on advance, and they can carry a similar business as that of the firm if there is no agreement to the contrary. And yes, absolutely. Can they start a competing business? Yes, since there is no agreement stopping them, they can start a competing business. Rights of P and Q regarding their share in property of Messrs. Will they get the rights? Yes, they will have the rights to get their share of profits and property. And if the accounts are not settled, they will have a subsequent share of profits or interest on others. Right? Comment on the right to expel must be exercised in good faith. I'm not going into this because you've already seen questions relating to good faith. The three conditions have to be present for good faith, right? X, Y, and Z are partners in a partnership firm. They were carrying their business successfully for the past several years. Spouses of X and Y fought in the ladies' club on their personal issues, and X's wife was hurt badly. Yeah, that is institute's quite a favorite. In fact, reconstitution of partnership and minor. I'm not saying that will be the exam in your paper, but then institute definitely has some love towards these two topics. Now, spouses of X and Y fought in the ladies' club and on their personal issues, and X's wife was hurt badly. X got angry on the incident and he convinced Z to expel Y from their partnership firm. Y was expelled from partnership without any notice from X and Z. Well, I do see interest, but I don't see any partnership interest at all. Their spouses fought, and that was the reason they expelled Y. So we see interest, but no partnership interest. So since the expulsion was not in good faith, yes, uh, exactly, Shrestha Param, correct. Shamal, I will only give you the paper. आप वही पढ़ लो कुछ भी. I have told you, I don't believe in important. Everything you should study. Now, seriously, X, Y, and Z are part. मतलब इतने लंबे क्वेश्चन देखे ना तो my first heart attack to come seeing that length of the question only gone. Heart is gone. It stopped beating. Now I have to get it again into motion to read the next question. Correct, Nikita. X, Y, and Z are partners in a partnership firm. They were carrying their business successfully for the past several years. Due to expansion of business, they plan to hire another partner, Mr. A. Now the firm has four partners, X, Y, Z, and A. The business was continuing at normal pace. In one of the formal business meeting, it was observed that Mr. Y misbehaved with Mrs. A. Mr. Y was badly drunk. Guys, what lesson we get from here? First, first, if you cannot handle your drinks, please control your limits, right? Correct or not? And please don't get into all these things. Why do you need to go and do all these things in a business meeting, right? Why do you have to go and drink? That's a seriously. So the moral of the story is don't drink. Anyway, jokes apart. Moving on to the next question. So Mr. A, Mr. B, and Mr. C. Shamil, I was. Do you still have a doubt you are an alien? I realized it long back that you are an alien. Correct or not? Huh? क्या शामिल तुम्हारा टाइम पास आप लोगों को करना है जस्ट यू वांट टू टॉक एंड टॉक नथिंग एल्स इधर ध्यान दो Mr. A, Mr. B, and Mr. C were partners in a firm which is engaged in the business of trading of branded furniture. The name of the partner was clearly written along with the firm name in front of the head office. On 1st October, Mr. C passed away. We have done this question in the class. His name was neither removed His name was neither removed from the list of partners as stated in the head office nor from the letterheads of the firm. How does it make a difference? Partner is dead, khatam, nothing else after that. As per the terms of partnership, the firm continued its operation with Mr. A and Mr. B as partners. The accounts of the firm were settled and the amount due to the legal heirs of Mr. C was also determined on 10th October. But the same was not paid to the legal heirs of Mr. C. On 16th October, the moral of the story was that third party wants to sue Mr. C's legal heirs for that, I think. On 16th October, Mr. X, a supplier, supplied furniture worth 20 lakh to Messrs. ABC, that is after the death of C. And the firm could not repay because of heavy losses. So Mr. X wants to recover the amount not only from Messrs. ABC and Company but also from the legal heirs of Mr. C. So analyze whether they can recover it from, on what grounds will he recover it from the legal heirs of C. They can recover it from the partners, whatever he is getting, but legal heirs of C are not liable at all. Why? Because after the death of any of a partner, anything done, not liable. Yeah. Okay, this is now an interesting question. Mr. M, N, and P were partners in a firm which was dealing in refrigerators. On 1st October 2018, Mr. P retired. Thank you so much, Param. I was so impressed with the answer. Actually, exactly, not liable. So anyway, death. There are so many questions on death, and if you will notice one thing, in all the cases of death, it is always the goods are ordered after his death. Arey Baba, not liable. Simple. Mr. M and P were partners in a firm which was dealing in refrigerators. On 1st October 2018, Mr. P retired from the partnership but failed to give public notice of his retirement. After his retirement, I'm so sorry, Mr. M, Mr. N, and Mr. P visited a trade fair and inquired about some refrigerators with latest techniques. Mr. X, who was exhibiting his refrigerators with the new techniques, was impressed with the interactions of Mr. P and requested for the visiting card of the firm. The visiting card also included the name of P as a partner, even though he has already retired. And he had not given any public notice. The whole point is that if a partner retires without giving any public notice, he will be liable for the acts of the firm after retirement as a partner by estoppel or holding out. Correct or not? That is totally the crux of the story. Okay. So this is one interesting question they have given. He retires without giving any public notice. So in case of retirement, if a partner retires without giving any public notice, I'll be liable for the subsequent acts of the firm as a partner by estoppel or holding out. So Mr. X supplied some refrigerators to the firm and could not recover his dues. Now Mr. X wants to recover his dues not only from the firm but from P. Will P be liable? Yes, he will be liable as a partner by estoppel or hold, right? So thus P is also liable to X for the refrigerators sold. Yeah. Retirement, legal consequences of the following: retirement of a partner. The firm will continue. A partner can retire either by giving a public notice or by giving a notice, sorry, in case of partnership at will, or by consent of all, or by an express agreement. When a partner retires from the firm, his liability is up to the date of his retirement and up to the date of his notice of retirement, and rights will be he gets a share of profits and property if his accounts are not settled, subsequent share of profits or interest at the rate of 6%, and he can carry a competing business as that of the firm if the agreement does not stop him, right? Then insolvency of a partner. The insolvent partner cannot continue as a partner of the firm. The firm is dissolved, but if the partners want, they can continue. He shall have no rights or liabilities against the firm. His estate is not liable. Ma'am, why is his estate not liable? Arey bhai, if he would have had any estate, then he wouldn't have. Messrs. ABC Associates is a partnership firm, but ma'am, we can use his assets, no, whatever is left after paying his liabilities. If anything was left, he would not be insolvent. But ma'am, he is personally liable. So if you remember, the rule is that when a partner has to bring in personal property, his personal property is first used to pay his personal debts and then partnership debts. Now it's not enough to pay his personal debts. What partnership debts he will pay, right? Messrs. ABC and Associates is a partnership firm since 1990. Mr. A, Mr. B and Mr. C were partners in the firm since beginning. Mr. A, being a very senior partner of aged 78 years, transfers his share in the firm to his son, Mr. Pratik, a chartered accountant. Mr. B and Mr. C were not interested that Mr. Pratik join them as a partner. Well, transfer of shares can take place only with the consent of all. For transfer of shares, consent of all is mandatory, right? Then, after some time, Mr. Pratik felt that the books of accounts were displaying only a small amount as profits despite a huge turnover. He wanted to inspect the books of accounts of the firm, arguing that he is entitled, it is his entitlement as a transferee. This shows that he has now joined as a transferee. As a transferee, his right is only to get his share of profits. He cannot check, inspect, and copy the accounts of the firm. However, the other partners believe that he cannot challenge the books of accounts. They believe correctly. Can Mr. Pratik be introduced as a partner if his father wants to get a retirement? Well, he can be introduced as a partner only if all the others agree. Otherwise, he cannot. And as an advisor, help them resolve the issue by applying the necessary provisions. So this we have. And can Mr. Pratik be introduced? We have already discussed that only if others agree. His right to check the books is not available even if he becomes a transferee. Even if he becomes a transferee, he is not entitled to check the books of accounts. So Mr. Pratik can be introduced as a partner only with the consent of B and C, and Mr. Pratik cannot inspect the books of firm, and the contention of the other partners is right. No, he cannot even inspect at the time of dissolution. He is just given a statement of affairs, the last day's position that he is given. He is not given the right to inspect the books, Param. Those people who know laws know they want to manipulate it even more. Namke? Excuse me. Okay, this question is a little interesting. I mean, it's a little confusing if you don't listen to this carefully. Messrs. XYZ is a partnership firm which is unregistered. XYZ and Company is an unregistered partnership firm. And they purchased some rods, iron rods from Messrs. LMN. This is also unregistered. Messrs. XYZ and Company. I want an answer from you for this question, okay? Messrs. XYZ and Company could not pay the price within the time as decided. Messrs. LMN and Company has filed the suit against XYZ and Company for recovery of price. Can LMN and Company file a case against XYZ? All of you. Okay. Everyone. Okay. Everyone says okay. No. Why? A partnership firm can sue a third party only if it is a registered firm. Since LMN wants to sue and LMN is not registered, cannot sue. Okay. What would be your answer? Let me check the second one. In case XYZ is registered but LMN is not registered. Now tell me. But XYZ is registered, no? XYZ is registered, no? LMN is not registered, but XYZ. Who is filing the case? LMN is filing, no? So when LMN wants to sue, LMN has to be registered. This is not registered, so again, no. What would be your answer if XYZ is unregistered? Okay. If XYZ is not registered and LMN is registered, now what will happen? Okay. Can sue. Okay. Now, even if the firm is not registered, third party can sue, no? So the suing firm is registered, then yes, they can sue. Is it clear? Dissolution of firm and dissolution of partnership. Yes. Dissolution of firm and dissolution of partnership. In firm, the whole existence of the firm comes to an end, whereas dissolution of partnership, only the relation of the partners changes. Dissolution of firm definitely means dissolution of partnership, but dissolution of partnership does not definitely mean dissolution of firm. Dissolution of partnership, the accounts are not settled finally, whereas dissolution of firm, the accounts are settled finally, final closure of books. In dissolution of partnership, the court will never interfere, whereas in dissolution of firm, the court may order for the dissolution. Referring to the provisions of the Indian Partnership Act, what are the consequences of non-registration? It cannot sue a third party, but a third party can sue the firm. It cannot claim a set-off of more than rupees 100, and it cannot. The partners cannot sue each other except for the dissolution of the firm. Right? Again, the same thing. One thing is here: does the act impose any penalty? No. The act only gives disqualification, it does not give any penalty for non-registration. What is partnership deed? What are the particulars that the partnership is always formed by an agreement. The partnership can never arise out of status, it's a result of an agreement. Now, this agreement can be expressed or implied. If the agreement is expressed, it may be oral or written, and when the agreement is written, the deed or where we mention all the clauses of the partnership as partnership. What will it mention? Name of the firm, the name of the partners, the date of joining of the partners, the date of business starting, the type of business they will do, capital contribution for partners, profit sharing ratio of the partners, admission provisions relating to admission and retirement of the partners, provisions for the settlement of accounts of the partners, commission salaries for the partners. All of these will be correct. And can they add more provisions? Yes. Can they delete some provisions? Totally agreement as they decide. What is the procedure for the registration of the firm under the act? So basically we have to fill up the incorporation document and give it to the registrar of the state where the office will be situated. This statement shall be sent by post or hand and shall state the firm's name, the place or the principal place of business, the name of other places where the firm is going to carry on their business, the date when the partners have joined the firm, the names and full name and permanent address of the partners, how long the firm will continue, and all of that. So each partner shall verify, signing the statement shall also verify it in the manner prescribed. Verify means that yes, we have agreed to this, whatever information is given is true to our knowledge. Okay, so P and Company is a registered firm, is registered as a partnership firm in 2018 with A, B, and P as partners dealing in sale and purchase of motor vehicles. In April 2019, A dies. Now only B and P continue the firm and the same business with the same firm name P and Company. In the month of December, firm felt the need of expansion and sharing the burden of expenditure. They thought of hiring a new partner with a mutual consent with each other. Hence, in 2019, the firm took a new partner S. The firm had supplied large amount of material to one of the clients, Mr. X. In spite of regular reminders, X failed to pay the debts due to the firm. The firm filed a case against X in the name and behalf of P and Company without fresh registration. See, there are two partners. On the death of a partner, no registration, the case can be filed. Yes. So the one before that, there are two conditions for filing. Firm should be registered, correct, and partners suing should be named as what? Partners. Correct? Now, now partner wants to file a case on the death of a partner without any fresh on the death of a partner without any fresh registration. They file a case. Can they file? Yes. But if they introduce a new partner and without fresh registration they file a case, when they introduce a new partner, registration is mandatory. It is no longer registered now. So if they file the case, the partner suing the new partner is not named as a partner. And since he is not named as a partner, case cannot be filed. So here, can we say the case will not be maintainable? Can we say the case will not be maintainable as the new partner? What was the name of the new partner? As the new partner is not named as a partner of the firm, right? As S is not named as a partner of the firm, correct? A and company is registered as a partnership firm with in 2016 A dies. B and C sue X in the name and behalf of the without fresh registration. Is it valid? Yes. Death of a partner, old name, registration not required, old name is absolutely valid. Now, if they take D as a new partner and then file a case against the third party without fresh registration, then it is not valid because the new partner should be named as partner of the firm. Correct? State the grounds on which a firm may be dissolved by the court under the Indian Partnership. Permanent incapacity of an active partner, misconduct of a partner, consistent breach of contract by a partner, perpetual losses, partnership becoming illegal, association, business becoming illegal, then except one, all are dead or all are insolvent, deadlock in the management, just and equitable grounds. Yes, exactly, Nikita. G, I, and S were friends and they decided to form a partnership and trade in a particular type of chemicals. After 3 years of partnership, a law was passed which banned the trading of such chemicals. As per the provisions, can they continue the partnership or will they have to get dissolved? No, they have to dissolve. Once the business of the partnership becomes illegal, the partners cannot continue the business without with the old Param, it can be regarded as a just and equitable ground for the dissolution of the firm. Absolutely, it can be considered as just and equitable grounds for dissolution of the firm. We are done this way, huh? We are done. Okay. What does dissolution of partnership firm take place under the provisions of dissolution of a partnership firm can take place, ma'am, if one partner murders? What will be the provision? If one partner murders another partner, then death of a partner, and if there were three partners, two are already, now if one of the partners who is who has committed the murder is if he is convicted, firm will be dissolved because only one partner is left. Till then, that partner will continue. So basically, death, right? Hmm, that depends. So that could be considered as a misconduct of a partner, correct or not? Now, when we talk about dissolution of firm, that could be considered as misconduct of a partner or a just and equitable. So, dissolution of partnership can take place either by order or by the order of the court or without the order of the court. Without the order of the court, it can be by agreement, that is, partners mutually decide to dissolve the firm. Happening of certain contingencies, period is over, purpose is over, firm is formed for a period or firm is formed for a purpose which is over. Partner is dead, partner is insolvent. In this, we have two more cases which is also compulsory dissolution, except one all are dead, except one all are insolvent. in case of a partnership at will by giving any notice. Or it can be dissolved with the order of the court. We just saw the order of the court cases, not going into that again. The permanent incapacity of an active partner, misconduct, all that, right? When does the dissolution? Oh, we just discussed this, not going into that again. MN partnership. MN partnership firm has two different lines of manufacturing business. One line of business is manufacturing of Ajinomoto, a popular seasoning and taste enhancer for food. Another is manufacturing of paper plates and cups. One fine day, a law is passed by the government banning Ajinomoto's use in food and to stop its manufacturing, making it unlawful because it is injurious to health. Should the firm, okay, this answer I want from you. Should the firm be compulsorily dissolved? Should the firm be compulsorily dissolved? You have to give the answer, guys. So, should the firm be dissolved? Should the firm be compulsorily dissolved? Exactly. So, thank you for all of you who has given the answer. Yes, correct. When a partnership firm has two or more business and any one is illegal, the firm only needs to shut down that business and it can continue the rest. Whereas if the firm has only one business which is illegal, the whole firm has to shut down. But if the firm has two or more businesses and one is illegal, it can just shut down that business and continue the rest. Yes. Yes. Messrs. Lucy, while drafting the partnership deed, taken care of few important. What are those points? She wants to know the list of information which must be a part of the partnership deed. As such, there are no, formalities. Partnership, the laws are not that stringent. There is no such formalities as such. It can be oral also, it can be written also, can be registered also. So as such, there is, like, but yeah, it should be drafted with care, and if a deed is made, it has to be stamped. Obviously it has to be stamped. And what are the contents? We already discussed this contents, yes or no, just a while back, 2 or 3 questions back. Do you want me to explain it again? Subject to the agreement, state the rules that should be observed by the partners in settling the accounts. When the firm goes into dissolution, while settling the accounts, the outside liability shall be set off first. After that, the partners' loans or advance. Then, if partners' capital, and if there is any surplus, that will be divided by the partners in the profit sharing ratio. If the firm's assets are not sufficient to pay up to the Yes, correct. If the firm's assets are not sufficient to pay up to the capitals introduced by the partner, it's a deficit. In case of deficit, the partners have to personally contribute to the deficit. When a partner personally contributes to this deficit and he has personal debts, his personal property shall be first used to pay his personal debts and then his partnership. So, with this, we are done with all the questions of partnership. So, hopefully, we have kind of covered also the entire chapter. Okay, Nikita. Okay. Uh, yes, it was an empty question. Absolutely. We've kind of covered the whole chapter also. So, yes, for today the game is over. I was planning on Sale of Goods Act discussion for tomorrow. If you want it and if you need to do it, I'll do it tomorrow. Thank you so much, Ramke. Thank you. Thank you so much, Shrishta, Heenal, Nikita. Thank you so much. Actually, Nikita, all my scanners has all the old questions, no? So that is why. Thank you. Thank you. So it has boosted your confidence, no? So I want good results. Okay. So I'll do that only. So we'll do one thing. Yeah, timing will be same because this is one time when everyone is free. No, Thank you, Nikita. Thank you. So this same time we'll have the sessions because this is one time when no college, nothing is there. So I'll see you all tomorrow. Bye bye. Good night. Take care. Study well and sleep tight. It is very important to not skip on yourself. Okay. So I'll see you all tomorrow. Bye bye. Bye bye. Bye bye.